Hi, my name is Justin Botillier, partner at Calyx CPA in Medford, Oregon. I wanted to send another video a little bit more about the things that impact cannabis businesses. And so probably one of the biggest things that impact cannabis businesses is IRC 280E, as well as another code section called 471. And so 280E was implemented back in the 80s to make sure that criminal enterprises were, specifically drug trafficking, ended up being penalized. Strangely, criminal enterprises are required to file tax returns. Al Capone got in trouble and got taken down by not filing his tax returns. So when businesses started filing their tax returns for criminal activities, they were taking full deductions and not having to necessarily pay taxes on what the government felt like they should be paying for their criminal activities. And so when marijuana got put into the Schedule 1 classification, it ended up being included as in a group of drugs that was considered to not have any medicinal qualities and be highly dangerous, and therefore is now subject to 280E. And 280E is a code section that says that businesses are not allowed to claim their deductions. Fortunately, they're able to claim their cost of goods sold deductions, which is supplies and materials, testing. I've been including licensing, their farm supplies, their utilities that directly impact the grow operation, if we're talking about a grow operation. Then there are other expenses such as advertising and office administration, maybe some interest that isn't considered directly related to the production of product. That would be considered subject to 280E and would have to not be taken as a deduction. So farms probably are the least impacted by 280E. Dispensaries then being the most impacted by 280E. And fortunately for farms, most everything goes into the growth of product. I mean, you've got most of your labor is directly related to growing cannabis. A lot of the travel that you do, a lot of the utilities that you do, a lot of the facility expenses can also be depreciated. The equipment can be depreciated and taken on, taken against the income as cost of goods sold. And so really it's only the very overhead costs that aren't considered to be deductible, such as your professional fees, your administration, maybe your insurance. Those kinds of things cannot be deducted. So for a farm, that doesn't impact farms too greatly. Sales, a lot of farms have a big sales budget, hire a lot of people for sales. That is debated as to whether or not it is deductible. I would say that, given face value, it's not deductible. So that is something that would be subject to 280E. Dispensaries, on the other hand, have much more of a rigorous test in terms of whether or not an expense is tax deductible. For example, payroll has nothing to do with the production of sale or the cost of goods sold. Really, it's just the purchases that the dispensary makes from wholesalers or from farms that is deductible as cost of goods sold, and then it can be resold. And so that would be considered their cost of goods sold, as what was paid for the good that was then resold. You can add things like processing and packaging, those kinds of things, and even inventory storage. You can get away with deducting those, but then dispensaries then, according to 280E, would not be allowed to deduct most of their payroll, maybe some payroll for buying product, for payroll for maybe processing, like rolling pre-rolls. And so those kinds of things could be considered deductible, but for the most part, your sales people, your bud tenders and whatnot are not. That payroll is not considered deductible. So that's been very difficult for dispensaries. Recently, the IRS has said that 471, IRC 471, which is an inventory, it is rules regarding inventory. And so one of the things that farms can do to make sure that they're being able to defend themselves in audit would be to apply the rules of 471, which means keeping track of inventory, making sure that they know what their inventory numbers are. People that are, accounts that are pretty conservative would want like work in process. So like they're gonna wanna know like how many plants that you have, you know, clones that you have, or immature plants that you have, and then how much is drying, and then what is your finished product, and kind of have like a what they call a work in process. So a lot of conservative accounts would want that. I try to break inventory down into units because we don't have huge numbers, right? I mean, at least in Oregon, you're limited to the number of plants that you have. And so we just try to break it down to individual units. Don't get too parsnickety with exactly how much is in which phase. It's all cost. It's all based on cost, typically not fair market value. It's kind of like, well, what were your costs to produce? And typically by the end of the year, harvest has happened. It's dry. I guess if you're using light dep or something like that, then it's going to be a little bit more complicated. But here in Southern Oregon, we do a lot of outdoor, and the product has been dried and harvested and now is being sold. So it's kind of easy to know what is on hand, how many pounds per hand. You take the cost of your costs and divide it by the pounds produced, and then figure out how much that you have at the end of the year, and then you kind of know how much you sold. So that was a little bit nuanced, but those are kind of the steps that you have to figure out. And we use a system called metric. A lot of the states will use that, legal states use that, and it's required to have some sort of seed to sale tracking, so you can get a lot of information from the inventory. Now, 471 for dispensaries has not historically applied to dispensaries, and not have helped them much, because 471 really applies to cost of goods sold in terms of production. But some new information came out from the IRS. It's a frequently asked questions, or at least it was brought to my attention recently. And 471C has been something that's been out, and it was really helping dispensaries in terms of what they're saying is dispensaries are allowed to deduct costs as cost of goods sold based on their bookkeeping or their accounting reporting. So if payroll, for example, is included in costs, if facility costs are included in cost of goods sold, then you can take those. So that's amazing, right? That was amazing. But they did then also put out some additional proposed regulations that would say, nope, no, we're pulling that back, we're pulling that back. So we've been very back and forth as to whether or not we can be more aggressive with expenses. Right now, we are taking more of the aggressive approach, backed by what the current rules say and our interpretation of those rules. Also, clarification provided us from our colleagues in the legal field. And then there was the proposed regulation that would say, oh no, we didn't really mean for you to be able to take those expenses now. But then, frequently asked questions, there's a website, if you Google marijuana industry frequently asked questions on the IRS website, you can see that they point to 471 as if 471 is significant for dispensaries. So that's good news, because that means, well, maybe they are saying we can take cost of goods sold and we can apply these reasonable costs. Because as far as dispensaries are concerned, they get the end of it. You know, the worst end of the cannabis industry in terms of 280E. It will be like 80 and 90% effective tax rates by the end of the time they get their tax returns done, with some allocating payroll, with allocating square footage to cost of goods sold. historically we've been able to get that number down, but from the, like just from face value, IRC 280E is like no. And so that's been very difficult for people. So that's all I've got for you. Feel free to reach out to me and my company, my organization, Calyx CPAs, and we can be reached at calyxcpa.com. That's CALYXCPA.com. And the phone number is 541-816-4483. Again, you can reach out, schedule a consultation. If you're just looking for a second opinion, we could do that. If you need more information on 280E and 471, good luck out there, and thank you very much.